All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Guess it's afternoon for many of us, but anyways, I guess those of you in Hawaii, it's a little bit different. But let's get rolling. Market giving up the gains from this morning. We saw the commentary on oil and all of that while we were on live video this morning, and that rally has faded, and in a very interesting way, and I'll show that here in a moment. But we do have a new signal on the board here today, and that is VLO. And VLO is triggering bearish here. And if we take a look at the chart, you can kind of see this was up over 45 earlier today, down around 41 now. You definitely can move. This is a stock that can certainly move, and is giving a fresh bearish signal with the downside 3-7 crossover on it today. And I went out and I took a look at the options, and the spreads for Valero aren't too bad, but I need the stock to drop 25%. The stock to drop 25% to double my money on the option. Yeah, we talked about it this morning and the option values, and yes, options are moving, and we showed that and everything else. But in terms of these monthlies, there's just a little bit of a different risk reward scenario, and it's just so far outside the challenge parameters at the moment here with Valero that I'm not willing to go jump into it. I can't argue against it if you do. Just understand the risk factors there with it. But it is one that is signaling there on the downside. I thought Alibaba was going to trigger. In fact, really thought it would trigger, but it hasn't here. It's one where the option is $9. Right, which, okay, great. I don't care, $9, $5, 10, $50. I guess $50 be a little hard for the challenge right now, but $9 we could do. But basically, need a move to the new low in order to double money. I would do that one if I had a signal. Yes, that's not a great one, but it's better than anything else we've seen out there, and certainly miles better than Valero. So we'll see. Maybe Baba kicks in tomorrow. We'll see kind of how it plays out, but so far, Valero, the only downside signal on the board. Now, we do have other downside crossovers, stocks like Facebook, stocks like IBM. IBM's actually up today, but has a downside crossover on it, just the way the 3 and the 7 are calculated in this fall-off day here. But overall, nothing, nothing to go after. I looked at FedEx again and the options again, and do I go and buy some puts on them today after the downside signal yesterday? And the options on them aren't awful, in terms of the way Valero are today. You can see the options are down about $1.50 from yesterday. We've seen the implied volatility fall off about 4 points here. I'm going to hold out. If tomorrow we see FedEx up a little bit and the options fall to this same degree, I think I'll go after and grab some, with the challenge parameters on the put side. But we'll see what tomorrow brings. But I am going to give myself just a little extra time here with this signal, just given what the conditions are out there. And, going to, don't want to, take away what could ultimately be a very nice trade opportunity, and something that I do expect to be a nice trade opportunity. But I do need the option. We're about 30% overvalued right now on the FedEx option when we look at what it is relative to historic norms for it, which, okay, 30% given what this market is, it's not too terrible. It's not Valero there. But, if it comes into that 20% area, I'll look to go and grab that here, tomorrow, provided the bear signal is still intact there. Okay. All right. As far as the overall market, no real change. No real change in the metrics. We saw it trigger with a new bearish signal yesterday. The bullish percent index, still going down here today, even though the market itself is up. But earlier I mentioned just that interesting flow, money flow in the market today, and it's one that we really have not seen. And that is one of the tech stocks kind of lagging. We have Facebook in the red, we have Apple in the red, we have Amazon, which is in the red, we have Google in the red, Adobe in the red. And most days that have been fairly flat to slightly up, we've seen these stocks outperform. They've been the carriers. Today we're not seeing that. The energy stocks are the carriers, but they're up 7%, but they are such a small portion of the S&P 500. I believe they're down to somewhere around 4 to 5% of the S&P 500 in terms of their weighting, that they just don't really move the needle all that much. We are seeing the financials outperform a little bit here today, but after yesterday's lag, that's not really much to say. You did see the Bank of America trade I did put on here this morning. I did that live on video. Again, not recommending anybody go do that, but just to show you that options move, and that option it's gone from 25 up to probably 35, so it's moved 30-40% today. So certainly can move, but the risk factors are fairly different than what we will typically run up against. I want to come into let's take a look here at the sector summary. I'd show you the energy sector on top, utilities, healthcare, consumer staples. It's still a very defensive grouping today. Consumer discretionary, a big laggard today. Communications, industrials, tech, financials, all lagging here to a certain degree. So it's still more of a defensive structure out there in the market, which, that just adds some fuel to the fire of that next leg down being on, here for the SPY. But, we are seeing a little bit of, glimmers of hope for the bulls in terms of, the VIX. If you look at the VIX here, the VIX is still coming on down today, but it has been a slow grind lower here for the VIX. Nothing too dramatic there. And you'll notice the VXX. Why do I bring this one up? Well, this one takes into account VIX futures. So, front end month of the VIX is coming down, but back end months of volatility still isn't. So there's still a high level of concern out there in the market. Looks like tomorrow we'll hit the 1 million confirmed coronavirus cases. Heck, we'll probably hit it today. And that's just with the numbers that are announced and measured and everything else. And we can sit and scrutinize the data all we want, but the sad reality is the data continues to grow in an exponential fashion, at least here in the U.S. In Italy, it's no longer growing exponentially. It's kind of just growing the same each day. So it's lost some of its exponential growth, though Spain still has that exponential growth property to it. China just stopped reporting any cases. Germany, this is kind of like Italy. It's not, it's not exponential as it sits right now, but it's still strong, growth there in coronavirus cases. France continues to be exponential. Iran, which kind of got rid of its exponential nature, the slope has though steepened here of late. So it's it's one where the UK is just starting to get blasted here. So sad circumstances out there around the world, and still more for the market to have to take into account, more money to be flooded into the markets in terms of money from governments and central banks around the world. That has not stopped, and that is just getting started. We will see significant amounts of money continue to roll in. We've talked about the play on that is gold. Gold is the best play on that money flood, kind of just long term there with it. So I wish you and your family well. Please, hope you're staying safe, and we'll talk to you tomorrow. Take care.